Good morning, everyone. Myself, Omkar, on behalf of Kirin Advisors, it's pleasure to welcome you all to the Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. So, today marks day two of our third day summit, 3 day summit with the series of focus management meetings lined up. So, with the we continue with our second interaction of the day with the Fredun Pharma Limited. From the management side, we are pleased to have Mr. Fredun Managing Director of the company. Good morning and welcome, sir.
Good morning.
And from the Value Educator team, we have with us Mr. Pranit Zakadi. Good morning and welcome.
Good morning, sir. Good morning, everyone.
So, with that, now I would like to hand over the floor to Mr. Pranit. Over to you, sir.
Thank you so much, sir. Good morning, everyone, once again. Brief introduction before we begin. Fredun Pharmaceuticals Limited, established in 1987, in a Mumbai-based manufacturer and exporter of pharmaceutical and healthcare products. The company produces a wide range of allopathic formulation, including tablets, capsules, syrups, and ointments across therapeutic segments such as anti-diabetic, anti-hypertensive, and antiretrovirals. Over the years, the company has expanded its portfolio through group entities into nutraceuticals, herbals, and dietary supplements, diagnostic kits, and animal healthcare. With a long-standing presence in regulated and semi-regulated export market, Prudent focused on offering affordable quality formulation supported by integrated manufacturing and a diversified product base. With this, I conclude the company overview. Now I hand over the stage to Mr. Fredden, sir. Over to you, sir.
Thank you so much for joining, guys. I really appreciate it. We are a manufacturing company based out of Mumbai. We have a cluster of three plants in Palghar. We also manufacture across 37 locations in India, where we contract manufacture ourselves. We have about 1,700 SKUs with around 27 therapeutic ranges, and our products reach 52 countries. We are one of the largest manufacturing plants for a single location in the country, and we are further expanding it within the next 2 years to be in the top two, top three plants in the country. In the last 5 years, we've launched a pet care brand under Freossi. We have launched a nutraceutical brand, Fredun Nutrition. We have also launched a mobility brand under three sub-brands, Braceon, DG, Nebon. We have also launched mass market cosmetics under Beauty Fred and specialized dermaceutics under Virgin Beauty. We have a large and extensive GX division as well that is in line to ensure that by 2029, about 100% of the products that come out of our ecosystem are Fredun branded, and from the current 70%. We have a team of around 800 people and contractual people of around 600, so a good 1,400 plus team. My team is my greatest asset because 130 employees are with us from day one. 260 employees are with us for the last 16 years, and we have done fundamentally well in terms of our growth. Our last 17 years CAGR is 30%. Our new brands which we have launched, we have innovative products. In pet care, we are the first ones to launch the kind of products we did. In nutraceuticals, we are one of the first ones to have double-blinded clinical trials for nutraceuticals. We have patents for bone grafts, and we also are growing rapidly in our diagnostics as well. We have India's first standalone pet diagnostic center in Worli, and we are starting one more in Malad, and then about 8 across India in the next 3 years. So a lot of good things coming up, and a lot of positive products, positive outcomes, and we have got phenomenal traction with the pet products. We've got phenomenal traction with our mobility, and hopeful for continuing the growth pace as we have in the last 17 years. I would love to take any questions if you have so.
Okay, thank you, sir. So participants, now the floor is open for Q&A sessions. Kindly raise your hands or you can drop your questions in the chat box. Yes, Mr. Devang, you can go ahead and ask your question.
Yeah. Hi, sir. So the question regarding the company's inventory and working capital, can you just highlight out some of the points, like in which quarters you consume much more inventory, or in which quarter, like the working capital is much more utilized over there?
Yes, the inventories have been started building from July 1, and we increased our intensity for inventory buildup from July 2020. Uh, uh, Started. For example, Freossi has about 130 plus SKUs. Beauty Fed is about 280 SKUs. GX is about 165 SKUs. So, in order to launch those products, we require to create MOQs for certain products. But though the number of SKUs are 1,700 totally, but there are 40 to 50 ingredients are required to manufacture our product. Because they are common ingredients, there are almost 29,000 SKUs in our facility. That build-up had reached peak inventories in early 2024 calendar year, and then we have reduced. At one time, we had almost 360 days of inventory. Now we reduce it to 280 days, 220 days. This year, it will be somewhere around 196 to 120, 200 days. In the next 3 to 4 quarters, it will go down further to about 170 to 180 days. And within the 6 to 7 quarters, it will go to around 125 to 130 days. Because we have to keep at least 30% of our inventories in WIP, about 15 to 20% of inventories in finished goods, and we require to create MOQs for our RM and PM. So, but the nature of the business remains that at any given time, we will have 120, uh, 25 to 130 days of inventory. The last quarter being always the highest quarter historically, and that is how the business functions. Inventory buildup from November end to February is always high. Inventory buildup in the first quarter is always low. But because the business is growing constantly and we are adding new SKUs, right now there is no such particular month or time where the inventory is high or low. It's a gradual process and it's a continuous process. Within the next 6 to 7 quarters, you will see the inventories also line, and the inventories are directly related and proportional to the working capital deployed. So that will also come in line accordingly.
Yeah, the one more question is there. So currently, the preferential allotment and the QIP was there. So that will come to a dilution of 30% of the equity new. So is there any plan for the promoters to participate, or is there any plan the promoter will not cut at least for next 1 year or 2 years the stake?
The promoter, myself and my mother have also participated in the QIP.
Okay.
In the issue, so we have also put in our funds. That overall, our stake dilution will be hardly a few percent. So we strongly believe in this company. All our eggs are in this basket, and every time we have an opportunity, we would also want to invest.
Okay. Thank you, sir. Thank you for my time.
Thank you, Devang, sir. Yes, Mr. Rishabh, you can go ahead and ask your question.
Hi, good morning, Mr. Fredun. Hi, good morning, Praneeth and others. I have a quick question related to the pet care sector. How's the response of the new products launched by Fredun Pharma in the pet care sector till now been like? And do we have any pipeline of any other products which are being worked on or which we plan, think of launching soon?
Yes, we have got phenomenal success. if you see, and because I never compare my sales, but last year we did around 30 crores of branded pet care sales. And this is without burning. This is without having an unnatural or inorganic growth. 4.5 years it took us. Fundamentally good products which are well researched over last decade and a half were launched. uh, we even launched our functional food. In fact, a couple of months ago, we launched Snacky Jain, which is now in the market from this month onwards. Uh, Frankly, for a product like Snacky Jain, which is pure Jain biscuits for dogs, we are booked for the next 3 to 4 months in terms of our capacities, because we got more than anticipated orders for the same. Our Omega products like Fremega, we are selling almost 35-40,000 bottles a month, only in a couple of states. So in terms of our products like Daily Power, in terms of our products like Frey Prime Cal, doing phenomenal. First, it was difficult for us to sell 10 to 20 bottles a month when we launched. Right now, if I drop in 30,000 bottles, it will be over within a day and a half. So new products are definitely coming in. We are in our stage 4 trials will start from February onwards. We will probably be the first one in the country, maybe in this side of the world, to launch those kind of products for pet care. We also launched India's first standalone diagnostic center for animals, with India's first CBCT machine for pets. We are starting one more center because we've got phenomenal requests. I'll give you an example. On the day we opened, we got 38 CT scan requests, because there is no standalone CT scan with USG, with a full-time anesthetist in town. We are also planning to have ancillary setup. We have just started working on creating a blood bank for dogs. That is a way to connect, and we have also taken over Wagger last in October. By February, that e-commerce platform will also start, which will be India's first neutral e-commerce platform for animals, and also a single portal for where you can get trainers, breeders, dog groomers, doctors, and also practitioners aligned. So we have exciting things coming up for the pet care. Our response has been phenomenal. You go to any pet doctor and you ask about our company, and a good chances they know us. And in any business, knowing the company is 90% of the battle. So we're doing well. Hopefully to do even better as the months and years go by. Our
Definitely,
goal
sir.
for
I just have
our
a
goal
small
for
follow-up question. Please go ahead.
yeah,
Please go ahead.
our goal for pet care is very simple. By 2032, no pet in India should be able to be born or die without using a Freossi product or service.
Right. Yeah. So just a small follow-up question, if the organizers can allow me. Is that, sir, if you can see in the last 1.5 months, the big brands like Reliance, Dabur, everybody have started entering the pet care sector with their own verticals of pet food. Now, do we see any overlap with any of the Fredun's products, or what would our your or do we see your strategy that where they might also enter the sectors which Fredun is already into, because it might look lucrative for them? And what would our strategy be, to create a differentiation and our USP and stick to our targets?
Yeah. See, all these big companies are entering the pet food market.
Correct.
Okay.
Yes.
They are entering the pet food market. They are not entering the pet care market. Unfortunately, many people overlap the two. Now, pet food is something that we don't want to get into. We
Hmm.
want to be a complementary to the pet food. We want to be an additive to the pet food. We want to be a supplementary to the pet food. It's like simple. I want to be the table salt. आज आप मुगलाई खाना बना रहे हैं, टेबल सॉल्ट यूज होएगा, आप साबूदाना वड़ा बना रहे हैं, टेबल सॉल्ट यूज होएगा. I rather be the table salt irrespective of the food. For them to get into our products, nobody can stop any company from doing what they want. But the kind of brands that we have created in the last 4 years, 4.5 years, relatively, these markets are smaller for bigger companies. The reason why they're getting into pet food is because 65-70% of the sales of a pet care market comes from pet food. But people don't realize that food is not the only criteria for growing an industry. You require
Right.
diagnostics, you require right kind of supplements, you require right kind of nutrients, you require right kind of diagnosis, you require so many other factors which people just forget. People think pet मतलब pet food खाली कुत्ता खाना खाता है, बाकी कुत्ता जीता नहीं है. But over a period of a few years, a decade, I think people will start aligning to what we are doing and actually understand how we are encompassing every part of the pet care market without actually lingering on anybody's turf.
Definitely, sir. Thank you. Thank you so much for the clarity. Have a good day, gentlemen. Thank you.
Thank you, Rishabh sir. Yes, Mr. Avi, you can go ahead and ask your question.
Hi, am I audible?
Yes.
Hi, good morning, everyone. First of all, Mr. Medora, I love your story. I have read a lot about you, and the amount of effort that your parents have you and put in this company is commendable. And I've read the last 20 years of annual reports, and the journey has been fantastic. So congratulations on that. Just two small questions. One question is, so you're guiding for your generics brand to grow at 15 to 16% for a long time. I just want to understand in terms of the IPM market, right? The overall IPM market is growing at 8-9% annually. So is it because your scale is small right now, the volumes are small, that is why you see that bump up on the overall IPM market? And what are the 3-4 therapeutic areas where you think that you will be probably a bigger player, or is your focus area for growing this GX line that you're thinking about by 2030?
So yes, of course, our numbers are much smaller, so growth is definitely seems higher. When we were 4 crores in 2010 and we went to 8 crores, we had 110% growth. So technically, our highest growth was 15 years ago
Yeah.
because of the smaller number. We are very strong in anti-diabetics. We are very strong in hypertensives. We are very strong in anti-diabetics because we are the largest manufacturer for US vitamins for their ROW and India. Products like EcoSprin, products like Glycomet, products like Duotrol, products like GP1, GP2, which practically everyone knows about, are manufactured by us. So we can definitely get into inroads. We know how these categories work, and we have been doing this for the last 3 decades for various companies. So for us to get into such products is definitely more helpful. Secondly, fundamentally good products, good quality products, वो repeat order आता है. What I always tell people is two things are needed. First, good quality product. Second, no money out of the system. If you maintain that, and there's a very good chance you will have repeat sales, there's a very good chance you will survive, and that is the only reason why we have existed for 40 years. Just existing for 40 years in India is doing something right. We have seen that growth. We are envisioning growth in hypertensives. We are envisioning growth in specialized diabetics, which is not there in the GX market. 2 years ago, when we launched certain products, every single distributor said, "Okay, Fredun sir, ये नहीं होएगा sir, ये product GX में नहीं जाता, ये खाली prescription में ही जाता है." And I said कि एक काम करो, ऐसे ही ले लो माल, बिकेगा तो बहुत बताना, नहीं तो वापस दे देना. Only for that kind of product. and after 3 months, 4 months, the distributors came with repeat orders. And I said, क्या हो गया? बोलते हैं नहीं सर, somehow चल गया ये product. मैं बोला देखो ये product is a fundamental good product. Plus, most of our products are chronic in nature. We are not much into acute products. So once वो एक कस्टमर वो पत्ता लेके आ जाता है, फिर वो लाइफ लॉन्ग वही पत्ता ले ले लेके अपना सेल होता है. So the growth is gradual, but growth is sure. And that is why we have been able to achieve such sustainable growth rates. We are still a very small company in terms of our top line and our revenue. Well, next 4 5 years, we can easily outbeat the market. We will definitely strategize and see how we can align ourselves better for what the future holds.
Hmm. All right. Can I just have another follow-up question? Fine.
Sure.
Okay. So secondly, I just wanted to understand that in terms of the visibility of your customer-facing products, like on the mobility front, like the chew balm and the pet care front. Now, I am sitting here in Delhi, so I've tried to do some ground research, but I think you're still concentrated in Maharashtra and the western states. So just want to understand your plans about, expanding and all over India.
Yes.
Is it a working capital
See,
issue, or do you have that in
yes.
plan? Because visibility matters, I think, in these products.
True, very true. I'll give you an understanding.
Yeah.
Just for mobility, there are 15,830 retail stores in Mumbai alone. Okay, for the mobility sector. Now, similarly, Nagpur will have a few thousand, and Nasik will have, and Pune will have, and we cannot spend 4,000 crores in inventory and just put material across all states. That is number one. Number two is whenever certain we are in the launch phase of various divisions. So out of our 280 SKUs, there will be some SKUs which will be doing phenomenal. There will be some SKUs which will be doing average. There will be some SKUs which will have a slow turnover time. So we also have to learn, and we are in that learning curve because our supply chain behind the sale part is the manufacturing part, is the procurement part, also has to be aligned for that kind of sales. Because most of the products are made in-house, and of course some mobility products are procured where we ourselves get it manufactured. Technically, now we are at volumes where we are renting out plants, but it takes time to get a supply chain also right. So I'm a baby step guy. I rather under promise and over deliver than try to over expand. We are doing well. I have no reason why I need to go crazy. Within the next 18 to 24 months, you will see the reach in the northern parts for certain products. Delhi and certain areas have our pet care products. Bangalore has our pet care products. Certain states in certain cities in Tamil Nadu have our pet care products. But yes, because we are a Western-based company, predominantly it is easier for us to focus in the western part of the country.
Thank you. And I hope you keep under promising and over delivering like you've been doing for the last 20 years. Congratulations.
Thank you. God bless. Thanks.
Thank you, Mr. Abhi. Yes, Mr. Ishika. Miss Ishika, you can go ahead and ask your question. Hello. Miss Ishika, you are not audible. Hello, Miss Ishika. Yes, Mr. Ashish, you can go ahead and ask your question.
Sir, this is regarding the GLP-1. I think that trend is also coming. It will be like complementary to your diabetes portfolio, right? So anti-diabetic tablets. So do you plan something in that area? Because I think that should pick up in next 2-3 years is what I'm reading.
Yeah, I mean, first our goal is get the products what we have in roads. Definitely, as the market innovates, we have to innovate ourselves as well. We will see what is required at that particular time in the market and play our dice accordingly.
Okay. And on Wagger, what products do we ourselves want to launch in that site? Because that's going to be our site. Again, what's the strategy from our side?
See, for Wagger, our first will be the products for the rest of the world. We will not push our products. नहीं तो कोई वेंडर हमारे उसमें ऑन बोर्ड ही नहीं होगा. उनको लगेगा कि ये फ्रीडम का ही खुद के प्रोडक्ट्स बेचने के लिए वेबसाइट है. So first we will have all our, I want, there are so many good small manufacturers which are doing very nice products in food, in treats, in small, clothing and so many things. उन लोग को एवेन्यू नहीं मिलता है. Amazon 30% ले लेता है. HUFT और जस्ट डॉग्स और ये सब लोग उनको 3-3 साल तो ईमेल का जवाब नहीं देते. तो उन लोग के पास एवेन्यू ही नहीं है और उनके पास एक्चुअली अच्छे प्रोडक्ट्स है. So I wanted to be a portal for such small manufacturers where they have good products. A pet can use a good product and fundamentally have an effect in the industry overall in the long run. And of course, then we will add our products as well. But Wagger is not bought or created or optimized to sell Freossi products. Freossi will be one of the many vendors for Wagger. Wagger will be neutral by itself. And that is how we want to take the sale of Wagger hopefully in multi-million dollar sale very soon.
And pet food category do you want to enter? Because that is a big space. What you said to a participant response.
Yeah, pet food per se, I don't want to. I am not a big proponent myself of packaged pet food. I strongly believe in home food for animals. But for cats, yes, we will have packaged food because it is almost impossible to make good quality home food for cats. And for dogs as well, we are in the additives, we are in the supplementary market. So yes, we are. Anybody can give any kind of food, kibbles or home food or anything, and we will be part and supportive of that diet in order to complete the nutrition requirements of the animal.
And just one request, we would like to have a plant visit for the investors early next year. So will that be possible? Because we reached out, but we didn't get a response.
I welcome anyone and everyone. In fact, I want people to come. You can talk to Kirin people and we will organize something. You should see what we are doing. I tell my bankers also, I tell my investors also कि हम ये growth propose कर रहे हैं. हमारे पास इंफ्रास्ट्रक्चर है क्या वो ग्रोथ को सस्टेन करने का. अगर इंफ्रास्ट्रक्चर है तो टीम है क्या. टीम है तो उसका ऑर्डर फॉरसाइट है क्या. Because only when you visit the facilities, you will understand actually what the hell we are doing. We have 400,000 square feet of just warehousing. We have 250,000 square feet now of manufacturing. So I super would love if people would come or give me only 1 day heads up. 1 day. I have no problem. Come anytime. Come in the night at 4 o'clock. We are open and my team will be there. So just coordinate, and I'll be so happy to host.
So is it through Ernst & Young or through Kirin you're saying for plant visit?
Yeah, you can go through anybody, but Kirin is right now on the medium, so we will go through
Sure.
Kirin.
Okay, thanks.
So, Ashish sir, you can connect with us.
Yeah, yeah.
We'll arrange
Okay.
for
Thanks,
him.
thanks, and all the best for the future, and wish you a happy new year in advance.
Thank you. God bless.
Thank you, Ashish sir. Yes, Miss Ishika, you can go ahead and ask your question.
Yeah, apologies for the earlier interruption. Can you hear me now?
Yes,
Yes.
yes, you're audible.
Yeah, so I just had a question. You all have outlined a transition from the CMO business, which you all call the vintage business, to fully feed in branded products. And you all are also guiding a 15% year-on-year growth in the vintage business. So could you just clarify how these two objectives coexist at the same time and what will drive the vintage growth during this transition?
The vintage business also currently constitutes 70% of my own brands only. So the idea is to grow our Fredun GX division, and the Fredun GX division will grow faster than the third party sales that we are doing. Of course, there are some companies which we are working for the last 2 decades. We will not phase them out completely, but we will definitely not add new products. In fact, with those companies as well, in the last 3 to 4 quarters, we have started adding third-party products and completely gone from the job work manufacturing to a joint kind of manufacturing phase. So the transition is very smooth actually, but it will take time. It might extend a couple of more months than 2029. It might be sooner than 2029. But we have to understand fundamentally that our current vintage business also is around 70% my own brands only.
Okay, understood. Just one more question. When we view the business, we are looking at it from a vintage versus new age perspective and a pharma, non-pharma perspective as well. If we segment the business this way, could you outline the growth levers within the pharma business over the long term?
You want the growth drivers.
Yeah, like what is the growth
See,
lever
our
for
growth
the
drivers
pharma?
are based. Yes, I will explain. Uh, we have right now 700 plus registrations globally. Uh, we have around 1,350 in the pipeline. So it will take another 3, 4 years, 4 years for those registrations to come in. 1,350 out of the 1,350, even if 300 fructify into long-term orders, even if 30 out of that fructify into monthly orders, even if 10 fructify into super value products, that's driving the growth more than anticipated. So the way we have ensured is that we have bulldozed our way into our current markets, bulldozed our way into the markets that we pre-exist, and that is definitely going to drive our growth for our old school pharma products. Our pet care also has pharma products. Our Nutra also has certain pharmaceutical products as well. And mobility, of course, will have its pure new age. Yeah, our cosmetics, our dermaceutics have so many pharma-related products. So the only reason we are able to do such multiple variety of products is because our core expertise remains the same in order to manufacture and scale them. And we have developed products for the last 16 years in various things offshooting from the pharma base. So I think that kind of answers your question.
Yeah, thank you so much. I just have a small follow-up. What will be the growth rate for the non-pharma business?
Around 25 to 30% year on year because they are on a smaller base. Very difficult to say per exact percentage, but that is the ballpark that we are anticipating. various new age businesses have various gross margins. We will be focusing on all, and definitely the new age business has a higher gross margin. So the faster it grows, the better it is to achieve economies of scale, and ensure that the profitability is hit our balance sheet faster.
Okay, thank you so much. Just one small thing. What is the capacity utilization on a consolidated basis?
60% augmented basis is the capacity utilization.
Okay, understood. Thank you. Thank you so much.
Thank you, Mrs. Shikha. Sir, we will take a couple of questions from the chat box, then we'll come on again to the people. So first question is, as newer verticals like pet care and mobility scale up, how does the management ensure that the vintage generic business continues to receive adequate management bandwidth and the capital attention?
Business is on a cruise control on the growth based upon the registrations already in place. The vintage business numbers that you see in 2025 are a result of the work done in 2019 or 2018. So the work that the management has done between 2020 and 2025 will ensure that there is smooth growth for the next 5 years in the vintage business. Management attention is definitely on the new age business, but the vintage business is run by an extremely professional team. For the company our size, the management, we are overly managed in terms of we are very well organized. Every division, including the new brands, has a separate CEO. Every brand has a separate head. Every brand has an operations head. Every brand has a accounting team, and every brand has a supply chain team. So even the new age business brands do not occupy the bandwidth of management as perceived by people, and it definitely spares time for overall growth prospects for the company as a whole.
So we have next question is, with outsourcing expected to rise to 15 to 20% over time. So what guides the decision on which products are the best manufactured in the house versus outsourced?
Pharmaceutical manufacturing, you are allowed to manufacture certain products in certain licenses. One plant cannot get all the licenses, or even if there are multiple blocks within the plant. So a dry powder injection setup is different. LVP and SVP, that is large volume parentals and small volume parentals setup is different. So one facility cannot have all the kind of lines required, like lyophilizer stuff. So those which we don't have, we have to outsource. There are certain cephalosporins and beta-lactams which some plants only specialize in 4 to 5 products. It makes better sense to manufacture those products from those plants to get advantage of their economies of scale and help us penetrate further. So products in mobility, अभी walker है, wheelchair है, तो अभी व्हीलचेयर तो डेफिनेटली हम नहीं बना पाएंगे अपने फार्मा प्लांट में, वो अपने को आउटसोर्स ही करना पड़ेगा. So we have to be practical. We have to understand. We are also growing phenomenally in the mobility sector. Maybe after a few years, right now we are technically, as I said earlier, almost hired the existing manufacturing plants completely to build our sales. Within the next 5 6 years, maybe we might integrate something within our company. We might have some buyouts of certain things to get further benefits. But right now, it is prudent to manufacture certain products at certain places and some products at our places, depending upon quantity, depending upon product type, depending upon the pharmaceutical sector and therapeutic class, and also depending upon the licensing constraints.
Thank you, sir.
Ekan, you-
Yes, sir. We have next question is as an operating leverage has started. What are the key levers believe are critical to sustain margins over the medium term?
new age business have a intrinsically higher gross margin of 45 to 50%. Net margins are EBITDA levels are somewhere around 25 to 26%. So definitely when they achieve economies of scale, वो margins hit okay, average okay, we will hope to increase our PAT substantially. It's a gradual process, no inorganic growth, and only cancer grows abruptly. Human body takes 21 years to achieve this height and body. So good things take time. Time tells all tales.
Okay. Thank you, sir. So we have next question is the margin of 15% sustainable in the coming quarters as the company has raised funds for marketing spends?
There will be some margin erosion in terms of spending on some marketing. But overall, the top line is also growing. So there will be margins coming in from that end also. So the bottom line will not be substantially hit. Also, the money is not going to be spent in one quarter. It will be spent over the next one year. So next 4 quarters, it would be divided and spent. Of course, there will be expenses. If you want to build a building, you have to build the foundation first. But will it have a drastic impact on the bottom line? Not at all. Because again, as I told you, we are not going to go crazy. We are going to go slowly. We are going to ensure that there is repeat sales. Most of our products, I would like to say, that's 75 to 80% of repeat sales. So the need for marketing and promotions is to only add new geographies and demographics. There is no need to sell to your existing customer again and again. So that substantially lowers the cost of a customer acquisition in lifetime standards.
And the other question is, how do you see the competitive intensity in pet care post Reliance entering the segment to gain the market share, and what's our USP to sustain the growth here?
I just explained that question. I'm not at all doing any product which Reliance or Godrej or anybody is doing. I don't want to do that product. So their presence will have no effect on us.
Yes,
In
yes.
fact,
Thank you, sir.
they will
So
enhance
we have
our
next.
sales.
Okay, okay. So we have next question from Mr. Subrat that why you have moved to the pet care and what's vision on the pet care with the new acquisition. Also, how is the margin in pet care now and what's the aim to reach in 5 years?
Why have I moved into pet care? I'll tell you. I mean, for those who want to know, both my parents are research scientists. So a lot of my mother's research projects were into pet care products. So we are into pet care years and years before we actually launched pet care products. We had the products ready, but we didn't have the infrastructure bandwidth, we didn't have the financial bandwidth, we didn't have the operational bandwidth. So we didn't find the market opportune enough. So all these factors made us do the pet care market now. and that is why we went into it. What was the other question, sir?
The other question is also how is the margin in pet care now and what's the aim to reach in 5 years?
Margin in pet care varies from the product to product. In functional food, it is gross margins are somewhere around 40%. In allopathic formulations, gross margins go up to 60%, 70%. In terms of nutraceuticals, they go up to 65%. In terms of diagnostics, it is 30%. So average is around 40 to 45% gross margins. We are in a very specific targeted mode, and we have created brands in the pockets that we have existed. As a result, we don't see the margins being eroded. In fact, our margins will increase as our volume increases because of the economies of scales that will start hitting in. पहले मैं 10,000 और 5,000 बॉटल 3 महीने में बनाता था, अभी मैं 15,000 बॉटल महीने का बनाता हूँ. तो definitely it will lower the cost. We will have expenses right now for penetration. That is why that additional benefit will not be seen. But after 3 to 4 quarters, maybe around 5 quarters, it will be seen substantially in the books.
Thank you, sir. Sir, we will take questions from the investors directly. So participants, just make sure that due to the time constraint, we will able to take 1 to 2 questions per investor, as we have a couple of questions in the chat box also. Yes, Miss Nishita, you can go ahead and ask your question.
Yes. Hello. I just wanted to ask about the Wagger that we've acquired. When is that going to go online, and how do we see that scaling up?
Wagger will go online in February mostly. It is a very unique platform. It is not a normal e-commerce platform. It is going to have a over a period of time 24/7 online service for new pet parents. It's going to have onboarding doctors. It's going to have onboarding clients. It's going to have onboarding of groomers, trainers. It is going to onboard vendors. It's going to onboard people. So a lot of things are going to come into Wagger. It will take another 90 days for us to get that aligned. We took it over in October. We got the formalities done in end of November. So we have hardly 120 days. And the Wagger was not having all these portals aligned right now. So we are going to get those two. We are going to get new vendors onboarded, fresh people. So it's going to take time. So consider Feb and March to be perfect. Wagger has a potential to do even 500 to 800 crores of revenue over the next 7, 8 years, 10 years. We will have special updates on Wagger after the Wagger starts and launches. We will be updating our shareholders, our partners, our associates, our everybody on what exactly we are planning with Wagger. But it has fundamentally tremendous potential to be a blockbuster by itself and can be a super revenue churner for the company. Again, we are not going to go crazy with marketing and spends and burn 1 crore a day on marketing Wagger. That is not what our goal is. We will use our existing channels. We'll use our existing connects with our doctors. We will use our existing connect with our existing clients and promote Wagger through those channels where the cost of acquisition for a customer on the website is considerably cheaper because of our existing dominance in the industry. So we will be updating you in the next 90 to 120 days about Wagger itself.
Okay. And my next question would be what is the revenue bifurcation between the different segments that we have? And once the pet care segment picks up even more, how will that bifurcation look like?
So every division has a income. Last year we did around 30 crores of sales. This year we are anticipating around 42 crores of sales. But you have to understand these are branded prescribed sales. These are not online retail sales like the e-commerce platforms. So this is prescribed product. This is someone knowing what product to go and buying that product rather than it being a marketplace for other products to sell. So that's a big feather in our cap. We did direct exports of about 100 plus crores. We did indirect exports. We have done tooling of about 25 crores. Mobility has done about 19 crores last year. 17 crores of nutraceutical sales. 4 crores of dermaceutics. 9 crores of cosmetics. We did about 49 crores of Fredun GX. We did about 85 crores of third-party sales. So we are in fact quite diversified in our terms of revenue coming from a particular segment as well. So we are not our growth again will not be constrained if one segment doesn't do well, if at all. And we are very well organized in order to support all the segment growth too.
Okay, okay. And my next question would be if you have any revenue guidance for FY26 and FY27.
My guidance is simple. Our current growth rate will continue. And what investors should look out for is sustainable growth. What investors should look out for is creating brands. Our goal in the long term is to create a few brands which are more than $1 billion each. But for that, we require time, we require constant growth efforts. And I think we are not very far away. It's just a simple mathematic of compounding. So we are nearing our inflection point, and let's see how the next 8 to 9 quarters treat us.
Okay, thank you. That is it from my side.
Okay, thank you, Ms. Nishita. Investors, due to time question, we will be only taking one questions per investor. Yes, Mr. Pal, you can go ahead and ask your question.
Hello, sir. So my question is on the manufacturing and trading side. So as we have majority manufacturing of our sales, so in some of the companies, I noticed that most of company are saying that the Fredun Pharma is our client. So could you please throw some light on that part?
Can you repeat the question? Sorry, I didn't understand.
So basically, if the majority sales are manufactured by us, so could you please tell me why some of the companies is saying that the Fredun Pharma is our client in terms of manufacturing? So could you
Yes,
please
yes.
some
As I started in my opening statement, we are manufacturing at 37 locations now. In the last 14 months to 18 months, we have added 37 locations where we ourselves are manufacturing products under our name for them, you know. So, of course, and in as time goes by, many people will say फ्रेडोन का product हम बना रहे because हम हमारा भी product बना रहे हैं और हम हमारा product basket meet करने को हम बाहर से भी बना के ले रहे हैं. Right now we have 37. We might add another 5, 10 other sites as well. Because the kind of variety of products that goes into a market, you have to understand the fundamentals of the industry. A chemist shop owner will not take one product from one company, or else he will have to deal with 11,000, 12,000 different companies if he takes one product from one company. So one company has to have a 300, 400 product basket. नहीं तो वो केमिस्ट शॉप ही नहीं लेगा वो प्रोडक्ट, उसमें से वो सिलेक्ट और चूज करता है. Now, in order to have 300-400 from anti-diabetics to hypertensives to say NSAIDs to retrovirals to say cephalosporins to say beta-lactam to dry powder injections to liquid syrups to LVPs, SVPs. So we have to create and get those things manufactured from places and give it. Yes, majoritively we are making our products under our name, but in the last 18 months we have added 37 locations.
Okay, understood. Thank you.
Hello. Hello. Hello.
Yes, sir, you are
Hello.
audible.
Yeah, I
You are
can't hear
audible.
anything. Any other questions?
Yes. Actually, I was having some internet issue.
Okay, no problem.
Yes, Mr. Raman, you can go ahead and ask your question.
Hello, sir. Can you hear me?
Yeah, we did.
Yes, sir. Sir, I just want to understand what's the difference between the vintage business vertical and Fredun GX. Is it like the Fredun GX comes under vintage business or is it a separate this thing? I'm kind of confused with respect to it.
No, yeah, I'll explain. Fredun GX is a line of products. Actually, Fredun GX is a brand which we have created for distribution model of pharmaceutical products in India in order to offset our dependence on OEM manufacturing. So Fredun GX comes in the new part of the business because that will continue in perpetuity forever.
Understood, sir. And the vintage business is just CMO business, right?
Vintage business is our own branded export business also, our own branded and third party indirect exports also, our tolling business, our institutional sale business where we supply to governments and states and institutions of India, and also third party manufacturing for various manufacturers in India and across, of course, across India, across states.
Understood, sir. And sir, my last question is, you mentioned in the earlier conversation that H2 is heavier, and we can see that around 60% of the revenue comes in H2, 57 to 60%. I just want to understand why is the seasonality in this business?
There is no seasonality as such. I will explain to you. If you see our revenue for the last 17 years, H2 is always high. As manufacturers have a sale target, importers, buyers have a import target or a buy target. तो वो लोग अपना बाई टारगेट मार्च में कंप्लीट करते हैं. तो दे बिकॉज देन देयर बजट्स फॉर द नेक्स्ट ईयर आल्सो विल बी in line with what they have purchased last time. So that is why March is always higher. March in the sense the last quarter is always higher.
Understood, sir. Understood. Thank you so much.
Okay, Mr. Raman. Yes, Mr. Darshan, you can go ahead and ask your question.
Hi, I'm audible.
Yes, yes, sir.
Hi, Fredun sir. I just wanted to know US dollar at 91. Not that the increase in margin for our export.
Sorry, I couldn't hear you, sir.
So your
US,
voice is breaking. Please repeat your question.
yeah, I'm audible now.
Yeah, yeah.
Yes, you are audible, sir. Darshan, sir, your voice. Sir, Darshan,
We
sir, your
likewise.
voice is not audible.
Yeah, there is network issue. Hello, now am I audible now?
Yes, yes, sir.
Sir, just wanted to know on the export front, US dollar at rupee at 1991. Doesn't it increase our margin going forward?
Exports, definitely we would like to optimize our margins, but margins cannot grow in perpetuity. You know, आज 10% मार्जिन है तो कल 15%, फिर 18%, फिर 20, फिर 40, फिर 50, 60. It's not possible. Margins cannot grow in perpetuity. So optimizing the margins, creating a larger base, and growing the revenue is our target. Margins will be somewhere in the mid 20s in terms of gross margins, and net margins will be somewhere around 10% to 15%.
Okay, thank you. Get that.
Thank you, Darshan, sir. Yes, Mr. Murli, you can go ahead and ask your question.
Yeah. Um, yeah. My question, sir, it is about the Dent X3D, sir. And I have about, I think 4 questions, but all relating to that one. It's all short questions. It is like, when this Dent X3D is launched, sir?
Dentex CD is part of a different company. It is not about Fredun Pharmaceuticals at all.
Yeah, but it's a part of, right? Maybe subsidiary something, but no?
No, it's not a subsidiary. It is nothing. It is a completely separate company.
Oh, okay. So it's not part of this even listed company.
Yes, it is not part of the list.
Oh, I think then maybe no, it's not relevant question then, whatever I ask. But if it is okay, I can ask something.
Yeah, you can definitely
Yes,
ask
yes,
about
please
it,
ask.
but
Yeah.
it is not related to Fredun Pharmaceuticals at all.
Okay. So then no problem, but still just a couple of questions, very straightforward ones. So what is the market size of this, the dental imaging, radiological imaging market size? And then what is our share in that one?
We are India's largest dental diagnostic company. We have 8 centers in Mumbai, and we do reporting for 57 centers across India. In India, less than 3 to 4% of the people actually have proper diagnostics for dental. In the years to come, that number, even if increases by 1 or 2%, that is more than the population of some European countries. So the growth trajectory for the diagnostics and the support system will be high. We also use our connections with our doctors because we support 40,000 doctors across India, and we cater to them. So to cross sell our products to them definitely helps, and that is why we have been able to achieve the growth uh, in the company that we are.
Yeah, but the question is again, thanks for this explanation. But the question was again about like, what is the total, addressable market of this sector in India, and what is our share into that one?
Yeah, so the total number of centers are about 185 to 212. If you consider CBCTs in certain doctors' clinic, it will be another 110. So for standalone clinics, we are almost 25% of the Indian market we control.
Okay, great. So, and target is to just limit the growth to India only, or you're planning to expand also across the other
India
places?
is very vast. India is very vast right now. So next 4 5 years, even if we grow 30 40% year on year, we will still have enough room runway for India alone. So once we capture that, once we get inroads of that, then we will think of any further consideration.
And the growth plans you have is like, growing organically with the internal fundings, or you're also looking for raising some funds for this?
No, it's already a valued firm. We have done a few raises, and hopefully, right now is doing fundamentally well. In the future, if there is any requirement, we'll definitely do the needful.
Yeah, I would be quite interested into that one, but I don't know, means how
Yes.
I will come to know about your future growth plans, because even I would be interested in investing that area.
Definitely, I would welcome you to our office. See what we do. As I tell for Fredun also, please come and see what we do in dental. Physically see, tangibly see. Meet our 109 doctors are working full time, 12 hours a day. They are MD radiologists, prosthodontists, orthodontists, everybody. So I would welcome you to our office. Then I would take you to our facilities for dental. See our centers, because investing is one part. Understanding the business is most important, according to me.
Yeah, actually, I'm with the same background. I'm a, technology specialist of radiological imaging applications. So I have a quite good understanding. So that's how, showing some interest in that. Anyway, we can connect
Love
and
for
then see.
you.
Yeah,
Yes.
yeah. Thanks. That's all.
Thank you. Thank you, Mr. Murli. So investors, due to our time constraint, we won't be able to take further questions. Uh, for any further questions, you can directly reach out to us at corporateaccess at kirinadvisors.com. So thank you everyone for participating. Thank you, Fredun sir. Thank you for your valuable time. Thank you, Praveen.
Thank you so much. I
Thank you
really
everyone for
appreciate
joining.
all of them. Thank you.
Thank you, sir. Have a good day.
Thank you.